Welcome to Thoughts on the Market. I'm Andrew Sheets, head of corporate credit research at Morgan Stanley. Today, I'm going to discuss what we think we can actually learn from all of the back and forth in markets. It's Friday, May 16th at 2 p.m. in London. One of the dominant questions of 2025 has been and continues to be, what exactly is the strategy behind U.S. tariff policy? Are these tariffs simply a negotiating tactic designed to bring countries to the table in order to strike quick deals? Or are they something very, very different? An attempt to fundamentally reduce U.S. trade deficits, raise significant revenue, and bring production back to American shores. At a recent conference with some of our largest investors, we asked them which of these explanations they thought best applied. Well, about a quarter thought it was a negotiating tactic, another quarter thought it was that fundamental shift, and the remaining half simply weren't sure yet. Now, it's possible that this ambiguity is actually the point, designed to keep trade partners guessing in order to secure better terms. It's also possible that very different views on trade exist within the administration, and we're seeing them vie for influence, perhaps almost in real time. So amidst all this uncertainty and back and forth, it's useful for investors to try to take a step back and think what, if anything, we've learned. First, we think we've learned that markets have a pretty clear view on tariffs. Credit and equities sold off aggressively as tariffs were ramped up. They have rallied back almost as quickly as these same policies were paused or reversed. Second, this back and forth does complicate the economic data and makes it more likely that the Federal Reserve will leave interest rates unchanged, waiting for more clarity. At Morgan Stanley, we continue to think that the Fed makes no interest rate cuts this year. Third, even with the Fed doing nothing and interest rates moving around, bonds did diversify portfolios. Over the last 90 days, a portfolio of high-grade bonds like the U.S. Aggregate Bond Index has had just 1/5 of the volatility of the S&P 500, while at the same time delivering a higher total return. Yes, we think there is absolutely still a case for bonds to diversify within portfolios. Fourth and finally, the shock of the initial tariff announcement has passed, but there is still very real uncertainty about the economic impact, as even with the recent pauses, U.S. tariffs remain relatively high versus recent history. The next 2 months should start to give us the true picture of this impact, or the lack thereof, on both activity and prices. That will tell us whether the storm has truly passed through, or whether we're simply in the eye of it. Thanks for listening. Let us know what you think about our thoughts in the market. You can leave us a review wherever you get this podcast. And if you like what you hear, share thoughts in the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.